Welcome back. It's time now to take a look at the top business stories. The IFC looking to set up real estate fund. Visa card spending at this year's Dubai Shopping Festival up 37%. And the Japanese yen reaches record high against the dollar. Let's look at the equity markets first. The UAE bourses ended mixed today. Dubai's benchmark gained 1.2% to close at 1,471 points. Arab Tech Holding rose 2.9%. Dubai Islamic Bank rose 0.5%. Dubai Financial Market gained 2.5%. And DU was up 1% after experts forecast solid revenue growth and margin expansion. 97 million shares were traded, valued at 143 million dirhams. And over in the capital, the ADX fell 0.6% to close at 2,584 points, with the industrial sector posting the strongest losses. Both energy shares were also down. Dana Gas fell 1.6%, while TAQA dropped 0.7%. Telecoms operator Etisalat, on the other hand, gained 0.5%. The banking sector was mixed. Abu Dhabi Commercial Bank fell 1.2%, First Gulf Bank dropped over 3%, but Abu Dhabi Islamic Bank was up 1%. 43 million shares were traded, valued at 67 million dirhams. And let's now look at the GCC markets, which ended mainly higher today. And to talk about the markets this week, we're now joined by financial analyst Bruce Powers. Welcome to the show, Bruce.
Thank you.
Let's look at the Japanese stock markets. The Nikkei's been on a roller coaster ride, but the trend was clearly downwards. Is now a good time to buy?
Well, let's look at what happened. From last Thursday, the Nikkei index dropped as far as 21% as of yesterday. And today it's now down 14% from last Thursday. There's still a tremendous amount of uncertainty out there about the impact of the quake on the economy and how long the recovery is going to take, as well as the developing nuclear disaster, a pending nuclear disaster. Now, the central bank is going to be pumping an enormous amount of liquidity into the system.
15 billion yen, I think it is.
Something like that, and there may be more, and there'll be reconstruction and so forth. So that will have a positive boost on the economy, and that probably will be good for stocks at some point. However, are we at that point yet? I don't think so. We've had one big drop. We very well could have a deeper drop. Investors have to ask themselves, if they get in now, how much can I hold it if it goes down again, or when am I going to get out to keep my losses very small? But very risky to get in right now. Especially
when the Fukushima plant turns into a second Chernobyl. Exactly. I don't want to be invested in the Nikkei then. So let's look at something else. Japan and the UAE do a lot of business together. Apparently the cost of the whole catastrophe mounts up to $200 billion. What could that mean for the trade ties between Japan and the UAE?
Well, the impact on business between the two countries is certainly going to be affected, just like it is with any other countries. The specifics of that are still pretty difficult to work out. If we look at the amount of Japan exports into the UAE, they're the fourth largest trading partner after India, China, and the U.S., with the UAE buying a lot of cars like Toyota and Honda, a lot of consumer electronics. So I think that those numbers will probably go down, but mainly because the availability is disrupted. That disruption and how long it's going to go on is still uncertain, as the electricity problems still persist. 1/3 of the power in Japan comes from nuclear, and it's not just this one facility that we're hearing so much about now that has some problems. There's a few others apparently as well, not quite as bad, but the whole system is at risk now. It could take quite some time to get back up to speed and put all the manufacturers back online.
Okay, let's hope that the impact won't be too much for the UAE. Yeah. Thank you very much for coming in. Have a good weekend. And now to our top stories. The DIFC is looking to set up a real estate investment fund in the Emirates to attract investors to a range of property across the country. According to Dr. Nasser Saidi, chief economist of the DIFC, there is a lot of investment appetite in the region, but no organized market structure for investing in real estate. He said that a real estate investment fund is important as it provides a facility to invest on a broader scale. The fund will cover a variety of property and aims to attract a number of industrial and retail investors. It is proposed to be up to $150 million in size. Credit card issuer Visa reported a 37% increase in spending from overseas investors at the Dubai Shopping Festival this year. The total amount spent on internationally issued Visa cards in the UAE rose to just over $406 million. That is compared to $297 million at the DSF in 2010. Department stores benefited the most from this increase, recording a 57% growth in spending over 2010. The United Kingdom remains the country to shop the most, with visitors spending a total of $44.5 million through the duration of the DSF. Sovereign wealth funds from the Gulf region are laying the groundwork for acquisitions of minority stakes in Spain's troubled savings banks. Initial talks have begun with state investment firms in Dubai, Abu Dhabi, Kuwait and Qatar to take equity stakes in the Spanish savings banks. Jorge Gil, the managing director of the Spanish Confederation of Savings Banks, said he was confident for several investments to be finalized. The UAE government and that of Qatar recently committed 2.3 billion dirhams to assist in the recapitalization of the Kharjas. And in our fast financial news, telecom operator Du is expected to see solid revenue growth and margin expansion in the coming years, according to the brokerage house Schur Capital. Schur is the latest firm to back the company and initiated a buy recommendation. Its price target for Du is 4 dirhams and 3, and currently the share is trading at 3 dirhams on the DFM. Schur predicts half of all Du shares to soon be listed publicly. At present, only 38% of Du's share capital is listed. Tamu, the master developer of Marina Square on Reem Island in Abu Dhabi, has been given completion certificates from the capital's government on 4 buildings. Receiving the documents means property buyers can start taking over their units. Also, the certificates for other 9 towers that have been completed are expected in the next 2 months, Tamu said. Qatar International Islamic Bank will buy the whole of Birmingham-based Islamic Bank of Britain as it tries to create an international Sharia-compliant lender. The deal is valued at £4.8 million or $7.7 million. QIIB already owns 81% of IBB and now wants to purchase the rest. QIIB offers 1 pence per share. And after the break, we will run you through what's making the headlines in international business today.